What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Market Open live stream. We are here to close out the entire week, and today is going to be a bit of a deciding factor whether markets are going to be closing green or red. And if you do close red, if you do close down, this is going to be the fifth week in a row for markets to be red. We've been all over the place. This week, it's been a very kangaroo market where we've been all over the place. In other words, back and forth, red, green, red, green. And of course, today we are lower pre-market, down almost 1% pre-market right now for QQQs. And S&P 500 is also lower by 1%. So got to brace ourselves for what looks like yet another gap down day for the markets. And if this is going to continue, then for the week here, we are going to be lower by 0.5% on the S&P and by just over 1% for the NASDAQ, which is of course going to be the fifth week in a row for markets to be lower, which is in itself a very, very rare occurrence. 6 weeks in a row, 67% probability for QQQs, and for SPX, that's going to be 55% probability, meaning that if today is red and this entire week also ends up being down, the probability now jumps for us to see week number 6 and week number 7 to also be lower, because it is more difficult to essentially stop a selling pressure once it has started. Nvidia is down over 1.3%, back down to under 117. Tesla also selling off over 69 basis points right now. And then of course we do have a lot of individual stocks, including Palantir, which is down a little bit over 2% as of this moment in pre-market. And of course, a lot of other companies are also lower, including Meta, down about 80 basis points. The Magnificent Seven as a whole, so if I come over to my main watch list under this particular index, it's down over 1% also on the day. These are all the Magnificent Seven companies, and semiconductor stocks collectively are down over 2% as well. So yet another day. Hope you all are doing great and are ready to close out the entire week. I'll try to answer as many questions as possible. So again, I'm going to be live for the next 30 to 45 minutes. So again, if you have any questions about any specific stocks, macroeconomics, fundamental analysis, technical analysis, personal finance, investing, trading, options, I'm more than happy to go over everything, share my perspective, share my analysis, and get a good discussion going on the markets today. So once again, thank you so much for joining, everyone. And we just crossed over 98,000 subscribers this morning. So again, thank you so much for your support. It's our family collectively that is getting slowly and steadily closer to our target of 100,000. So we are very close, and I'm super excited for that day. I think my estimate is going to be before the end of March, but you just never know. So hopefully in the next 10 to 12 days, as much as 2 weeks, that we get to that target. Okay, hello everybody. Akash, Shane, Wayne, Umesh, Mauricio, Jeremy, Yusun, Milan. So can I get my new badge soon, man? Once you cross that, those yearly targets, then we're gonna be upgrading those badges. Of course, the highest tier is the actual MoneyVest logo, which is with the golden symbol. But of course, in order to get that, 10 years is what you need to be a part of the MoneyVest community, and that's when you will get that badge. But until then, of course, we've got a lot of different colors that will get updated. Okay, so let's see. Miguel, what do you think is a better buy right now, Google or Microsoft? I would say Google. Google's a better buy. Microsoft also is a good opportunity. The risk reward's gotten a lot better. If you look at the Magnificent Seven, stocks that I did a video on earlier. So this is the spreadsheet that I've been going over. You'll notice that we do have, Google, Amazon, Nvidia, Meta, 4 companies that, are perhaps one of the best ones in terms of valuations. And, if you exclude for Tesla, the average median valuation for these 7 companies, or 6 companies, if I'm excluding for Tesla, is 22 to 23 on a 2026 basis. And then 2025 basis, we're looking at 26 to 27 times earnings, right? Excluding for Tesla, because Tesla definitely does skew this valuation a little bit, considering that it's trading at 82 times earnings. But between these 4, in priority, I like Nvidia, then Meta, Nvidia, and then of course other 3 companies, Meta, Amazon, Google, are going to be perhaps on the same level. just because, I do believe that on a risk-adjusted basis, the opportunities here for these companies are significantly better. And this is, again, more from a long-term perspective, right? Long-term investing perspective, and you've got a long time horizon, because 3 to 5 years out, the probabilities are significantly higher for us to see markets up rather than down. On a day-to-day perspective, it is 50-50. On a yearly perspective, even, the probabilities for the markets to be up or down is very close to a coin flip. But as you extend those timelines, the rolling averages, the rolling probabilities significantly increase in favor of the bulls, as we have seen according to our historical analysis. So yeah, between Google and Microsoft, I would prefer Google. But I do also like, again, Nvidia, Meta, and Amazon at these levels. What are your thoughts on Nike? So Nike is actually part of our shopping list. It is on our shopping list here. It's down over 8%, trading now $65, trading down to a fresh new 52-week lows after beating expectations on both revenue and EPS. EPS coming in with a very, very strong beat. And, this is what happens with the market, right? Sometimes companies beat expectations, provide a strong guidance, and yet the stock price still drops. Could be a lot of different factors. I haven't looked at this, Nike's earnings exactly. Looks like they're dropping on 9% year-over-year decline. Revenue is expected to fall further. So again, they're seeing some softening in the overall revenue and consumer demand for their products. However, we've got a very strong support at $60, and I think my fair value is might be in and around those levels. I have to double check, but it is part of my shopping list, and I've put down a very conservative price targets on Nike as well. And it is down quite a bit from its all-time highs of 170. It's now fallen over 61%. So, really, really struggling. But on a monthly time frame, just take a look at this entire chart. Now trading almost down to its 200 simple moving average on a monthly time frame. That's going to be sitting roughly at around $60 per share for Nike. Okay, let's see. Is Toyota price undervalued, or is it because they are behind in the EV market? What is that ticker symbol? Let me just take a quick look. So TM right now trading at about $190 per share. Let me just take a quick look on the valuation, right? State statistics, we're looking at around 7 times earnings and a little bit less than 1 times sales. So, you could make a case that yes, that is a very, very cheap valuation, but there is a reason behind it. Because if you take a look at earnings per share expectations for Toyota over the next 5 years, there is no growth, right? It's a very stagnating type of EPS and revenue forecast for the company where, yes, we're seeing a little bit of an increase in revenue from $290 billion to over $364 billion, but EPS is essentially flat. And so it is trading at lower P multiples, lower price to sales multiples. It has, of course, done incredibly well since 1970s when it was trading at just under $1. It has increased by over 19,000%. But right now, of course, just be a little bit more careful, be more mindful of where we are headed. But Toyota's overall, I absolutely love the overall brand, the company. They're one of the best cars in the world, economic cars, and super stable and can run for years and years and even decades. So no complaints as a consumer. As an investor, just be mindful that, revenue growth is there, but earnings expectations are essentially flat for Toyota over the next 4 to 5 years. So that's something to keep in mind. And of course, I think these companies are probably very much indebted as well, right? So net debt sitting at over 199, close to $200 billion. So the company definitely has a lot more debt than cash on the balance sheet as well. Okay. Cindy, I'm a DJ and gamble. I couldn't disclose my positions out of shame. Just be careful. Be mindful of your positions. Only take as much risk as you can afford to lose. Milan says, also congrats. I'm very happy for the 100K coming. Thank you so much. I appreciate that. Nvidia, big update. Yep. So Nvidia is a stock where we recently had the GTC update down about 1.3%. Lots of new announcement in robotics, in physical AI, in agentic AI, the Ultra Blackwell, all the new products being launched from Nvidia. And, I'm very confident. I think, from a valuation perspective, from a perspective of where the world is headed in terms of artificial intelligence and, all the requirement and the need to build large language models and data centers and, reasoning AI and everything that is being worked on in this space. And Nvidia being at the forefront of this industry. And even if there is going to be competition and margins are, let's say, a little bit vulnerable to coming down, I already have that downward revision in place. I can, 20% downward revision in earnings, and even then, Nvidia would be trading at a very attractive PE multiple. 116, 117 is a level where, okay, you can sort of consider nibbling in, but I would be more interested in the low 100s again to dollar cost average and build a bigger and bigger position for the long term for Nvidia. Okay, let's see. Great community. Wishing you the best of luck. So much success. Raul, thank you so much. Iceman, thank you so much for joining. Do you think the markets will go up 5% today? Man, I don't know. Nobody knows. We don't do that here. We never make predictions like those here on this channel, because at the end of the day, I think it's really important for us to accept the fact that nobody really knows where the markets are going. And, what's interesting, and I always say this in our live streams, is that I can give you the newspaper for same time next year. So today's date is March 21st. I can hand you a newspaper of March 21st, 2026, and you can read the headline and still not know where the markets are going to go between now and then. That's how interesting the overall market dynamics are, because we might know what the Federal Reserve decision is going to be in the next FOMC meeting and still not be able to predict where the markets are going to go. We might know where the earnings are going to come in for a lot of these companies and still not know how the stock's going to react. And that is what's interesting about the market, is it's very unpredictable. And so, it kind of pays to be more reactive in the market than be proactive. With proactive, you're trying to make predictions, and as we know, it's almost impossible to predict consistently accurately. And so it's much better to be more reactive, assess the risk reward, understand where the opportunities are, while fully considering probabilities that we can head lower or we can also reverse back up. So, one of the best ways to approach the market is being net neutral from a direction standpoint. If we drop more, great, I'll buy more, I'll sell more puts. If we rally higher, great, I've already got my positions built and I am invested in some of the best, highest quality companies at undervalued levels. So either way, I am good. That's probably one of the best ways you can go about, investing for the long term, is not sweating it. And another thing is that you really want to create this survival mindset in the market. You have no idea, and this is only a correction, right? This is only a correction. We're only down 10% from all-time highs, which is nothing. It is absolutely nothing. It is just a healthy correction the market just witnessed. Now, imagine if you were down 20 or 25% for broader markets, individual stocks would have been down anywhere from 30 to 40 to 50%. You know what happens in that market? It is a complete reset. All the weak hands are shaken out. All the margin calls have been issued. All margin accounts have been liquidated. And the people who are surviving at that moment are the ones that actually end up making most money, most amount of fortunes on that recovery. So survival is very important in the market, because you don't want to get forced liquidated from your broker if you're using too much margin. You don't want to be trading on, on the edge of your seat where you're taking loans or you're maxing out your credit card or whatever. So it's really important to have that buffer. Always have that buffer, have that safety net where you can always rely on. And so if you see this 10% correction, 20% bear market, 30% sell-off, you are still comfortable, right? Survival and longevity is very, very underrated in the market. So, okay, let's see. MS Man United. Yeah, I know, man. I don't know how they're going to finish the season this year. I'm very concerned. We're bottom half of the table. Bottom quartile, actually. So not even, it's very painful to watch. But, okay, let's see. Do you provide daily, weekly trade alerts in our Discord that I can copy and paste to book profit? So, Deval, it's more educational. It's not just me, obviously sharing trade alerts. We've got a lot of members sharing their ideas and strategies, and it's very educational. And my focus has always been on education and, helping people understand fundamentals, technicals, options, and long-term investing and swing trading. So that's really what we focus. And at the end of the day, we really want everyone to make their own decisions, have a conviction level assigned to each company. So, we can look at the same stock, every one of us, we've got 400 people watching. We can look at the same stock at the same time, look at the same exact information, and come to different conclusions. That's, again, what the market is, right? Everyone's going to have a different opinion about a different company, about the same company. So, if you look at, let's say, Nvidia, all 400 of us analyze Nvidia together, looking at the same information, analyzing the same stuff, we will all arrive at the different conclusion. Every one of us is going to have a different conviction level. And so that's why it is really important for everyone to build their own story behind every stock that they decide to trade or invest in. to understand, read up on that company, and then make decisions off of that. Yes, we are here. We've got members that are more than 20 years experienced in the market. I've been doing it for almost 11 years. We got people that are long-term investors, short-term traders, options traders that are here that you can always bounce ideas off of. We can ask questions with each other. We can, strategize. But it really comes down to spending time learning about the markets, learning about individual stocks, and really just figuring out for yourself what fits with your risk tolerance and your time horizon, because everybody's going to be different in those sense. So yeah, feel free to join, learn as much as you can, soak up all the knowledge, engage, with like-minded individuals. That's really where the benefit of the community comes in, is a lot of education, a lot of networking that you can get access to. Okay, can you please check Tempus AI if it makes sense to open a CSP for next week? Yes, it has fallen quite a bit. It is a company that, of course, rallied off of Nancy Pelosi's big, order that came in. And again, when a stock rallies purely on momentum and sentiment, you see something like this that happens, right? The faster it goes up, just as fast it crashes back down. And same thing happened with Tesla post-election. Obviously we saw this massive rally after Trump got inaugurated, or actually won the election back in November, and then it quickly came back down 50% lower. So if a company does not have any fundamentals, then of course the upside move is not going to be stable. It's not going to consolidate. It's not going to stabilize at those prices, but instead it's going to come back down as traders take profits on that momentum. It's going to come back down to those same levels. We can go over a lot of different case studies. We can go over a lot of different examples where I can show you pump and dumps. In other words, momentum traders taking profits and the stock crashing back down. And I can also show you companies that rallied parabolically on fundamentals, and then they had a 20% correction or a 30% pullback, and then they stayed at those levels, and they were more stable. So, you have to really, understand that, okay, in the short term, a lot of this is going to be based on popularity, based on hype, but does it have, staying power? The fundamentals line up with the valuations. And if so, you can expect the prices to stabilize at some point. But if it doesn't, then something like this happens, right? Where the stock rallies 100% and then it drops, over 52% and just as quickly. But for Tempus AI, I haven't looked at this AI company, but seems like, there's massive losses. Quarter over quarter, they're starting to improve a little bit. So I'll definitely, do more research on this and see if there's opportunity here at $42, $43. But to answer your question, yes, cash secured puts could make sense at anything closer to $40 for next week. Yeah, so $40 for next week, and we're looking at, a sell-off of just over 13, almost 14%, which in 1 week is possible, but a little bit more unlikely. I wonder what kind of premiums we're going to be getting for those. So if it makes sense from a return on collateral standpoint, then I guess, you could consider it. But the most important math when you're selling puts is the return on collateral, because you're going to be putting aside cash to fulfill your obligation to buy those shares at that specified strike price. And if the return on your collateral, if the premium that you're getting for that collateral that you're setting aside is not worthwhile, then there's no point to doing it, right? And as a general rule of thumb, you want to be at least 8% on a yearly basis for that return on collateral, because otherwise there's better opportunities to put your capital, right? You can get 7 to 8% trading a large cap, big tech stock and still be able to get that 8%. But of course, if your plan is to buy that specific company, like for example, Tempus AI, then yes, you can kind of disregard that 7-8% threshold and be very excited about buying that specific stock at that specific price. So okay, I'm gonna, again, like I said, gonna try to answer as many questions as possible. Rosie, I actually shared my analysis on TTD. In our Discord trade desk, I covered that. It's been selling off very aggressively, now trading down to its support, incredibly oversold, and just the sheer amount of selling pressure for this company has been absolutely crazy. From 148, it's down 60% in just a few weeks, and they're incredibly oversold. 23 right now is where it's trading. And support level is going to stay put roughly at around $54, $55, all the way down to $38 per share. But it's still, even after a 60% sell-off, I believe it is still trading at a valuation which, you could argue is expensive at 70 times earnings and over 11 times sales and a little bit close to 38 times cash flow. So just be a bit more mindful that this sell-off, while it does look oversold from a technical perspective, fundamentally this might still be a pretty expensive stock from a long-term perspective. Yeah, triple witching. There's going to be a lot of volatility. So there's an index you can track. This is called TVOL. That's the TVOL on TradingView. It's essentially when a lot of these index futures, options, index stock options, index options, and index futures, a lot of them expire at the same day, which is going to be today, which is the third Friday of months. I think March, one in December. I think one in June, another one I think in October or August or something. So there's 4 times a year that this happens, and this is the third Friday of those months, which is today. And you'll see this indicator essentially spike because there's a lot of volume that is going to, a lot of contracts that are going to expire at the same time. And you can actually see exactly when that happens, right? So this is, third Friday of December, third Friday of September, and third Friday of June. And then this is third Friday of March. So yes, March, June, September, and December is when triple witching happens, and you'll see this spike up to over whatever this large number is. It looks like 4 billion. That is going to be the total volume for today after close. So there's going to be volatility. I mean, we're already starting to see VIX curl back up almost 6% higher on the day, back up to 21 as the markets are a little bit lower, down about 1% pre-market right now. And again, if we close red, then it looks like this is going to be the fifth week in a row for markets to be red. 5 consecutive weeks in a row where we're going to see red for QQQs and S&P 500, which is going to unfortunately only increase the probability for us to see yet another week of red, which is going to be week number 6, as per historical data. But this is really going to be the time for me to be accumulating a little bit, and I'm going to start sending out some alerts starting next week to dollar cost average and take advantage of that. What's your cash allocation right now? I think it's going to be somewhere around 20% at the moment. And let's see. So is it a good time to buy Walmart? Let me just take a quick look. So Walmart, very, very staple stock. Obviously it's been performing really well, consistently growing in terms of revenues and profits. It's done very well. Margins are obviously a lot lower, but it is a profitable company trading at 35 times earnings, right? So again, a lot of it is going to be a question around opportunity cost. If you're looking for something more staple, that's going to be somewhat recession proof. Yes, Walmart, Costco, some of these companies are worth considering, but they're also trading at valuations, which, it kind of begs the question. Like, they're trading at 35 times earnings. Costco's been trading at 40, 45 times earnings versus something like Magnificent Seven, tech companies that are growing at much faster rate, have better profit margins, better balance sheets that are trading at 20 to 25 times earnings, right? So there's always this question, and that's exactly what Josh Brown and Dan Ives were talking about during the GTC conference. I shared this in our Discord as well, where Josh Brown literally said this. He said that, you've got companies like Walmart, Costco trading at 35, 40 times earnings, and then if you're Nvidia trading at 25 times earnings, right? So it really begs the question where money is going to. Money is going towards emerging markets, international equities, as well as gold and bonds, right? That's where money's been hiding out. That's where bigger institutional investors and, traders have been hiding out in because of all this uncertainty with tariffs and growth scare. But eventually we know that, there's, money's going to be made in growth, and that's where a lot of that alpha is. And eventually they're going to rotate back into something that is going to be more risk on and more growth oriented. And when that happens, we need to be ready. We need to be prepared already when the money rotates back into growth. And look, we've seen this happen over and over again. This is not something new for me or for us, for our community, but I understand for some of the newer investors, it can be, kind of like a whipsawing price action where, we were pushing higher up until 4 weeks ago. And now the entire thing is like completely upside down, where a lot of these stocks are down 20, 30, 40%. Imagine investing in, Palantir, back at when it was at 120s, it's down like 50% from those highs, right? 39 to 40%. Same with Tesla. So a lot of these stocks, they went down very quickly in a very short period of time. Okay. TQQQ buy at these levels. So I'm going to be dollar cost averaging a little bit. I've still got a cost base around 69 to 70 bucks. Right now it's at 59. So I'm really, pacing myself here because I don't want to get caught with a very large position. Still early in the game. So if there is any more potential downside, if the Nasdaq and the S&P takes a turn for the worse, if this correction actually turns into a bear market, I want to be very mindful of that. So I'm keeping my dry powder as much as I can. Still dollar cost averaging, might still even consider adding a couple hundred shares, few shares here and there. But the bulk of the buying, I think I'm going to keep it for if we actually see more downside. It's either going to be we see aggressive selling pressure to a point where we're down over 20 to 25% for broader indices. So in other words, we're in a bear market, or we see a confirmation of a technical reversal, meaning that we're trading back over those moving averages. And I can actually see liquidity flooding back into some of the growth areas of the market. So one or the other is when I could see myself doing some heavy buying. Right now, keeping it light, keeping it somewhat to nibble levels, but some of the heavier buying is going to be more towards bear market or a confirmation for reversal. When did you decide to short the beard? Man, I know. Went for a little haircut and a beard. You can't see it right now with the light, but it's still there. It's still there. I haven't shaved it all off. It's still there. I know. I was kind of contemplating, but so hopefully you guys like it. Nice haircut, looking good. Yep. Thank you guys. Thank you. Appreciate that. Can you quickly say the time frames you're looking at specifically when you bring up your charts? Yeah. So most of the times I'm going to be looking at daily or weekly time frames from a more long-term perspective, but then sometimes I do have the 5-minute or the 1-minute chart. 1 minute rarely, mostly 5 minutes on over here, but then most of the times I have the daily or the weekly charts. So yeah, still holding Tesla. I've sold calls against my shares again. So closed out my $800 and $850 calls, and then now holding on to the $500 and $600 calls on Tesla. Yeah, David, thank you so much for mentioning everyone. To all those watching, if you appreciate the content, click the like button. There's 463 viewers, only 70 likes. Let's get that to over 400 likes. I don't care about. Subscribe so we can get up to 100,000 by the end of March. And then celebrate. I'm going to do a longer live stream, especially when we get the recognition from YouTube, the silver play button. I'm going to definitely celebrate it with all of you. And that'll be a lot of fun. That'll definitely be a lot of fun. So market's going to open in about a few minutes. Plaque time. Yes, that will be very, very fun. Okay, so let's take a look at Sunnova and a few other companies. Indian markets have been selling off. Again, there's been a lot of liquidity flooding out of Indian markets to other parts of the market, as other parts of, different equities as well. So, and there's just a lot of restrictions, man. I mean, there is a lot of restrictions in India that needs to be sorted out if they want to attract a lot of foreign investment. But really, it's been foreign investment, foreign capital that's been flooding out of Indian markets over to other parts of the market as well. All right, so let's see. The beard will be back fully by this afternoon. Well, it depends on the market, right? If we actually get a lot of whipsaw, a lot of seesaw, market as it has been, I wouldn't be surprised if I'm scratching my head and it is back. My hair is back and my beard is back. Would not be surprised. And I also wouldn't be surprised if there's a red mic that comes back, makes an appearance. Anyway, so markets are open now, everyone. QQQs are starting down 1%. We've got all Max 7 currently red, with the TLT, the only ETF right now in this watch list, green. Once again, this is where everybody's hiding out. It's in bonds, it's in safety, international markets, and nobody wants to touch growth right now. David, don't care about the likes. I'm taking my like back. No. Of course I do. Of course I do. Of course. Completely understand our statistics involving the Max 7. Would you recommend NASDAQ following ETFs? So, yeah, QQQs or TQQQ is a little bit more leveraged. So just be mindful. Just be very careful when you're trading these. But QQQs is going to be just one of the best ones. Or VUG, of course, is Vanguard Growth ETF. It's a little bit more on a growth side, or VOO is going to be the S&P 500. I mean, these are just your bedrock. This is like provides you stability, provides you more diversification, gives you exposure to almost every, some of the largest companies in the US. So for me, I mean, they've been the bedrock of the portfolio, and then everything else I can, on top of that, layer with individual stocks or options or trading. So VOO or VUG are some of the ones that I really, really like. So, Galilim, I'm new to the stock market. What do you mean when you talk about $500 calls on Tesla? So I essentially sell calls and puts. That's what most of our community does, is that we're selling options on a regular basis. And when you sell options, you collect premiums. Premiums are the fees paid by the buyer. Similar to when you're trading stocks, right? You're buying low and selling high. That's how you make a profit. When you're selling options, you're doing the same thing. You're buying low, selling high, but you're doing that in a reverse order. You're selling first, so you're selling high, and then you're buying back low later. Now, with every option contract, there is a expiration. In other words, till when is that option contract valid till? There's a strike price. At what price is this option contract exercisable? And then there is, of course, a premium attached to it, or the value of that contract, which is called a premium. So the seller of that option receives the premium, the buyer pays the premium. So since I'm selling the option, I'm receiving a premium against my call that I've sold. $500 simply the strike price at which that option will be exercisable. And so if Tesla gets up to $500, and in this case, I've sold a call until December of 2025, so later this year. So if Tesla gets up to $500 by December, I will have to sell my shares of Tesla to the buyer. So buyer has the right to exercise anything above $500. They can exercise their right to buy the shares from me, and I will be obligated to sell my shares at 500. Now, 500 is the reason I picked a strike price so far out, is because Tesla would need to double, more than double from these levels in order to get to $500. And that's only in the next 9 months, which is very unlikely. In my opinion, if it happens, great. My underlying position will more than double as well. And I'd be more than happy to get rid of some of Tesla at $500. Since the all-time high was 488, I doubt that we're going to see those levels anytime soon. But then you just never know. But then, of course, for selling a call that far out, you also receive a pretty hefty premium along the way. Okay, so you think today's a buy the dip opportunity? So, I mean, this is, I wouldn't consider this a dip anymore, right? So I think another thing that it is really important for people to understand is that a dip is only valid in an uptrend. Uptrend meaning that this right here, the entire structure for the market, if we are still trading in an uptrend, that is when the dip occurs. So, all of these were considered as dips. You can consider this as a dip, consider this as a dip. Right now we're on the weekly chart, but let me just go over to the daily time frame. All these small little pullbacks are dips in the market, right? Dip, dip. Over here, this is a dip. This right here, all of these are dips. So the reason why this is a dip is because it's still within the context of an uptrend. This is a higher high and a higher low structure. Now, the reason why this is not a dip, this is a nice little correction for the market, is because we have broken that trend. We are no longer in an uptrend because we actually made a new lower low compared to the previous low. And this is the downtrending channel within which we're trading right now. So that's why it is very important for us to be mindful that we're not out of this, market structure yet. If we get a breakout above 5,700, I still don't want people to get their hopes up, because, we could very well get rejected at this lower high. And we've also got the 100 SMA that's going to be coming up right above us from these levels, where if we get rejected, it's possible that we head even lower. Of course, depends a lot on macro factors, what happens with the economy, with tariffs, with growth, with inflation, interest rates, all that stuff is going to essentially get priced into the market. But technically speaking, there's no confirmation for us to see any kind of upside just yet. So this is not a dip. This is straight up a correction of lower highs and lower lows that we've already seen. Okay, Trump mentioned tariffs again at 8:30 in the morning. Going to be a crazy day, especially when you've got triple witching. So much volatility in the markets. How do you calculate the premiums? Well, premiums are calculated by the market, demand, supply. That's how premiums are calculated. Of course, call premiums jump when stock's going up. Put premiums jump when stock's going down. That's just how the demand is higher when stock's going up. That's same as, how it's like asking how stocks prices are calculated. Market prices are just a factor of demand and supply, and just like options prices are going to be a factor of demand and supply. All right, so let's see. Conan says, badass haircut. Thank you so much. What about the Hong Kong market? Well, haven't really covered the Hong Kong market as much. So I'm not going to be the person to speak about that. I can primarily cover Indian markets, the US markets, of course. That's been our main focus. And there's always some liquidity issues as well, right? I mean, I've looked at a lot of markets all over the world. US is by far the most liquid markets in the world. There's a lot of capital. They're the largest. They're also the most liquid. Then, of course, you've got markets over in London, you've got markets over in Switzerland, you've got markets over in Germany, in India, of course, in China. Very, very liquid and very large markets. So, but I haven't looked at Hong Kong markets. All right, let's take a look at Advanced Micro Devices, QBTS. I'm just going to quickly do some analysis on these companies, D-Wave Computing. I was looking at this company because of the just insane amount of momentum it has seen. But again, just be mindful of the fundamentals here. I mean, the company is just insane amount of losses here every single year with little to no revenue. And just take a look at these quarterly numbers. I am not sure if this is indeed correct, but this is just absolutely wild to see. The revenue is 8 million and somehow the company is actually losing 143 million. No idea how that is happening. I might have to dig deeper into their actual financial statements to look at their income statement, balance sheet, cash flows, all that stuff. But right now revenue is about 8.8 million and their cost of goods sold is around 3.2, which makes their gross profit 5.5 million. But then they do have operating losses, SG&A of 82 million. Of that, R&D is 35 million, selling general administrative expenses 48 million, which is crazy. Operating income is negative 77 million, so operating loss, so to speak. Then they have non-operating income. They have an interest expense on the debt, I'm assuming, unusual expense, which brings their total pre-tax loss of 143 million and the net loss of 143. So yeah, just be careful. I mean, a lot of these are going to be moving on a lot of momentum. And if it weren't for this rally since 2024 November, this was still a company that was trading at $286 million. So from 286 million, this stock essentially 10x'd, went up to over 2 billion. And so I would be very careful with these kinds of companies that are super small cap, very open to manipulation. That's why I kind of stay away from companies that are less than a couple $1 billion of at least market cap. Okay, QBTS, we just went over. Tesla's flying. Let's take a look at Advanced Micro Devices very quickly. So AMD, it's seen some nice momentum. There's been some accumulation that's been happening for AMD, but again, a big resistance that it needs to break out of is going to be $110 to as much as $116. So, still within the context of this downtrend, lower highs, lower lows, and support level is going to stay up roughly here at $90 to $96, and right now resistance at 106 for AMD. All right, Tesla is flying. Yep, so 238 up over 1%. I wouldn't necessarily call this flying. We are just down 52% from all-time highs, man. This is not flying at all. This is barely creating some separation from the ground. Barely. So yeah, Nvidia is dropping a little bit, 2.2%, 115. What are your thoughts on HIMS? HIMS I do like. I think the valuation got a little ahead of itself when it was trading at $70 to $80. So, of course, it is rolling over a little bit. Rolling over would be a bit of an understatement. It's down over 56% from its all-time highs. So, valuation eventually, everything will normalize to its valuation because having this mentality that if you buy and someone else will come in and pay you more for it, eventually it stops working. It works until it doesn't, right? And so I've seen this, over and over again. And, sentiment is one of the best indicators to understand where we are in this cycle. Oftentimes when we are at all-time highs, we are very expensive for a lot of these individual stocks or the markets in general. I really like to read the comments and read what people are saying. And oftentimes, when we're talking about, the markets are expensive or this stock has gotten ahead of itself, like Palantir, for example, Tesla, for example, despite of what my personal biases are or whether I own the stock or not, I will tell you guys the truth and will tell you, okay, this is expensive, this is incredibly overvalued, it's, valuation just doesn't make sense here. And I will read the comments sometimes and, people will say that, okay, this is the beginning. I mean, this is going to get much bigger or, we're going to see higher highs and new all-time highs. It's just never going to stop. And that gives you a bit of a perspective of where we are in this cycle, because a lot of that is, very recency bias where the more recent move is extrapolated into the future, and you just believe it's going to continue forever. And same thing is true on the way down, right? Like right now, when we talk about risk reward getting a lot better, valuations are a lot better, there's a lot of attractive, opportunities in the market. Everybody's thinking, oh, we're going to see more downside. We're going to see more downside. Sure, we could see more downside, but that is not something that I'm willing to bet on, right? I'm not going to be waiting around to expect more downside. So it's really important to, and I did this in my yesterday's video as well, the risk of waiting is far greater than the risk of buying. Risk of waiting will always give you a permanent loss of opportunity, versus a risk of buying is going to give you a temporary loss of capital. The difference here is the temporary versus the permanent. And I had this issue with me, when I was first getting started. Like I used to wait for the exact opportunity, the perfect timing, and it never used to come. There's never a perfect time to get started. And that's the difference between long-term investing and trading, right? We have to accept that as well. Traders, yes, you need to have precise entries, precise exits, have to have your stop losses in place. But investors, there's got to be more flexibility. You can't wait for the ideal price and the ideal time. All right, everyone. So that's going to be it for today. Really appreciate you all for joining. You think people are sleeping on intuitive surgical, AI surgical robotics, Nvidia chips? No. So Messi, I don't know why I'm answering your question. If your name was Ronaldo, maybe I would consider your question there. But no, I still respect Messi in the game. So Intuitive Surgical is actually part of our shopping list. It is a very high quality company. It is a stock that I do have in the shopping list. It's a fantastic business. It is sold off, from its all-time highs of 616 coming down to 470 support. So that is going to be that level to watch here. For Intuitive, trading below those moving averages, very oversold. So it is one to consider, from a long-term perspective as well. All right, everyone. So thank you so much for joining. I really appreciate you all. Make sure that you subscribe to the channel. We're very close to 100,000. Let's see where we're at now. But share this with friends, family, traders, investors, everybody. And we are just over 98,000. So thank you so much. I really appreciate you all. Be ready for the live stream. And thank you so much. So happy investing. And I will see you all in the next video. Take care.